Trucks, the lifeline of India's economy. They connect corners, they connect consumers. Balmanpreet Singh owns a fleet of 400 trucks. With global oil prices plummeting, you'd expect his fuel costs to fall. But he says no. Look at the numbers. Since India imports around 75% of its fuel, cheaper crude means a lower import bill. In fact, India says it saves $1 billion for every dollar drop in the price of crude. But if the money isn't being passed on to regular folk like Singh, where's it going? It turns out the big winner from cheap crude is not the Indian consumer, it's the Indian state. And that's because it's gotten rid of subsidies. Let's think of it this way. Earlier, India would spend, say, this much to buy very expensive fuel. It would then sell the same fuel at a subsidized rate to its consumers, meaning it would just get this much, leaving a gap in the market, leaving a shortfall. Now that the price of oil has fallen so much, India is still buying oil, spending, say, just about this much for its oil. It's selling the same oil to its consumers for this much. As you can see, there's no shortfall. In reality, India is saving a reported $23 billion a year. Spare cash that's helped India plug its fiscal deficit. Cash that can be used to fund essential infrastructure projects. It's also allowed the state to control inflation, keeping it at well below its target range of 6%. So India has taken the opportunity of cheaper global oil prices to finally cut decades-old fuel subsidies. Problem is, if crude rises again, this time the consumer will have to pay up. Malika Kapoor, CNN, Mumbai.